Now, before we move on to other markets, especially China, that I want to focus on, in the US, if you look at the kind of trading that is currently happening there, one thing that is interesting is that some of the big companies, mostly tech, are still traded quite flat. Microsoft, for instance, is down about 1/3 of a point. Google is up 1/3 of a point. Nvidia is up about 1 point. And the rest is all there in terms of where you expect the trading is going to be. So yes, while the market is actually quite actively trading, and they don't celebrate Merdeka at 31st August, so it's currently 31st August in the morning of the PT time, maybe even Mountain time. We're looking at the market opening in the next maybe 6 hours. We're going to see this trading happening. But one thing that I want to focus on is, of course, Apple, because they have just announced the date for the launch of the iPhone 15. Having said that, Apple is currently up only at 0.12%. So as you can see, the only company that is kind of in the tech sector that is kind of attracting great interest and great valuation is none other than Amazon, and unfortunately, a company that I have to mention, Tesla. So these two companies are still driving the kind of direction and interest from investors, especially from the tech sector. So look at this kind of map, and you can understand that the trading that is currently happening in the US, while the numbers are still kind of sluggish, there's still a lot of trade coming in there, despite the economic data coming from the US and perhaps some notion that the Fed might maintain interest rates at that level. Okay, in other news, we're looking at China, for instance. The largest banks there are preparing to cut interest rates on existing mortgages and deposits. The latest state-directed measures to shore up growth in the world's second largest economy. And of course, announcement coming in that big state-owned lenders are reducing rates on the majority of the nation's 38.6 trillion yuan, or about 25 trillion ringgit on outstanding mortgages. Now, this may come as soon as Tuesday next week. So do keep an eye out when it comes to China economic data, because the reductions will only affect home loans on first homes, not the subsequent homes. This is going to be a big impact because Evergrande, a big company in China, has announced that they're going to file for Chapter 11, and the question now is what will be the repercussions on the other markets in the Chinese market when it comes to home loan companies. So big news there. And of course, with this, there is also that subsequent idea of PRC citizens might go aggressively in terms of buying properties overseas. So do expect PRC folks to come over to Malaysia even to buy properties here. Okay, China threatened on Tuesday to take Japan threatened on Tuesday to take China to the WTO to seek a reversal of Beijing's ban on all of its seafood imports after the release of treated radioactive water from the stricken Fukushima Daiichi nuclear power plant. The Prime Minister said that the government was gathering information on reports of movements to boycott Japanese products in China and would work with business leaders to address the situation. China also vowed to strengthen policy support and speed up government spending as the economy's recovery comes under strain. These comments were largely a repeat of Beijing's policy stance, with Zhang reiterating the government would beef up counter-cyclical measures and policy reserves and strengthen the coordination of various policies in the second half of this year. Pardon me. So, Japan wanting to sue China at the WTO. Meanwhile, China wants to strengthen policy support and speed up government spending are two big themes coming in from China, especially when it comes to the backdrop of the PRC, for instance, or the party itself trying to strengthen or bolster the improvements within the domestic policy. Now, over the Merdeka, I had a chat with a friend of mine who has just recently met the Taiwan Minister for Foreign Affairs, and the idea that is circulating in Taiwan right now is that they're looking for an ability for them to reduce the power of the Communist Party within China as a mitigating risk on how to reduce or lower the temperature of the Chinese postulation over Taiwan's sovereignty. So that is an angle that I feel that is quite interesting, because Taiwan is not going to go head-on with the Chinese government per se, but rather trying to see how they can actually improve on aggravating the Communist Party's standing and make it hugely unpopular within the Communist Party to increase the domestic tensions of Taiwan's sovereignty. Now, over the next few months, we're going to see a lot of Taiwan maneuvers in this regard, so do check that out as well when it comes to China and their domestic policy. Okay, still in East Asia, this is because South Korean labor unions are battling company managements to press an unusual demand, that is to raise the age of retirement to give workers a few more wage earning years before having to seek another job to supplement slim pensions. The issue fuels a contest for jobs between older workers among one of the world's fastest aging populations, with a rate of poverty among its elderly of 3 times the OECD average. The young workforce entrants are now also facing dwindling options. This, if you feel, has a lot of reverberations with the market that we are in right now in Malaysia, you're not wrong. This is because the government is also mulling to increase the pension age, especially in the private sector, to allow for the grey economy to, number one, be delayed slightly by a few years at least, and number two, try to ensure that the reduction of the usage of pension funds and EPF savings amongst elderly is actually reduced again by a few years. This is to mitigate a few things. The first is, of course, the number of Malaysians per capita when it comes to savings in EPF is actually 9,000 per head. 9,000 EPF members, yeah? Every single EPF member, you get the entire AUM of EPF and you divide it, you get 9,000 ringgit. That's not a lot when it comes to savings, pension savings. And especially if you expect to live 20 years post-retirement, well then that is certainly not enough. So the retirement crisis is happening in Malaysia. And of course, in South Korea, there are postulations and work that you can see just now, as I mentioned. So will we see the same in Malaysia as what we are seeing right now in South Korea? One more news before we move on to some market news. Australia has sent its first shipment of barley to China after Beijing scrapped tariffs this month, with the nation's trade minister confident that restrictions on other products will be removed as relations improve. Domestic tension and diplomatic tensions between Canberra and Beijing have improved, however, since the election of the centre-left Labour government last year in Australia. But Chinese tariffs on some of the nation's commodities still remain, including wine. Australia has taken the dispute over wine to the WTO against China. So as you can see, the WTO is actually quite an interesting factor here right now when it comes to how we can move towards getting China back in the world order. But I highly doubt that the WTO is going to be able to solve anything.